Okay, next up, we have BPH Energy Ltd. BPH's ASX code is BPH, and the market cap is approximately 35 million. BPH is a diversified company holding investments in biotechnology resources, including a significant interest of around about 36% in the unlisted oil and gas exploration company Advent Energy Ltd. Presenting for the company today is Managing Director and Executive Chairman David Breeze. David, welcome back, and please take it away.
Thanks for the opportunity to speak today, and I'm pleased to cover the key investment, Advent Energy and its PEP11 project, as the primary part of my presentation today. I'll touch on clean hydrogen, and Cortical, of course, has just recently received FDA. Next slide, please. I'm going to talk mostly to the Future Gas Strategy consultation paper, which was released by Minister Madeleine King, the Resources Minister, at the beginning of October. And in releasing that paper, she stated in her press release that decreasing gas supply faster than demand will lead to shortages, supply disruptions, and high prices, whilst worsening poverty and inequality. Now, all of the elements in the next parts of the presentation will address each of those issues. And if I can move to the next slide, please. Next slide, please. Yes. So if we look at the paper, the consultation paper, demand and supply curves that were produced, what you see across the top of the screen is the demand curve, and you see dipping from left to right, or left to my right is the supply curve on the existing supply as seen by the instrumentalities established by the government to oversee this area. And what you'll see is out to 2034, but starting at 27, you see it go out to 800 petajoules per annum of shortfall. And I'm going to give you context for that in some of the next slides. Critical point though. If we move to the next slide, please. If you look at Western Australia, moving out to 2032 on the supply and demand curves, you see that equally out into 2032, the supply side for Western Australia does not meet the demand side out through that period of time. In other words, a gas shortfall. Now, if we move to the next slide, and this is a global LNG demand by region and supply status produced by Rystad, the international company. Top red line is the demand curve, and the bottom two segments of the slide obviously give you producing and under construction. So again, what we're seeing on an international basis is a shortfall of supply versus demand. Now, in context, what that's done is to put pricing up and to create a current LNG shortfall in the marketplace. The price into Japan at the moment is $18 a gigajoule. Next slide, please. So if we look here, this is the gas usage in the states across Australia at the current state of time. This is the domestic gas usage. So what we have is 500 petajoules of gas usage in Victoria, New South Wales, Northern Territory, South Australia. That's 500 plus, and Queensland. Now, you will see the conclusion that you can reach out of looking at those supply-demand curves is Australia must either source more gas or, in fact, cut out supply into the eastern states or cut out supply into the export markets. and Minister King, Prime Minister Albanese, and the Energy Minister Bowen have all given commitments to Japan, Korea, and other major consumers of Australia's LNG. And remember, we're one of the largest LNG suppliers in the world, that Australia will continue to meet their LNG demand, because it's now recognised, of course, quite widely, including by the IEA in the last week, that gas is a crucial part of the energy transition as a key support for renewable energy. Next slide, please. In fact, when we look at the AEMO 2022 Integrated System Plan, what we note is that the gas-fired peaking plants in Australia will increase to 10 gigawatts by 2050. And we're currently at less than that. So that just gives you an indicator of how much gas is going to be used as the backup for renewables when renewables can't produce during that time frame. Now, if we can move to the next slide, please. Looking at this particular slide, it takes you into the LNG export projects. And I'm just going to touch on a couple of points relative to the Eastern Australian position. It used to be that the Blacktip field in the Northern Territory supplied through the gas pipeline network into Eastern Australia. When Blacktip supply went down last year, then in fact they had to shut that pipeline down, and that had an impact on it into major industrial users in the eastern states. But most importantly, it also meant that the Northern Territory, which significantly relies on gas for its electricity supply, off Santos and INPEX. And drawing off INPEX, of course, meant that they were unable to optimise their supply of LNG into Japan at that time. Now, the other key factor here is that the pipelines run from Northern Territory into Eastern Australia, but not in the reverse. Now, equally, if we look at the next slide, please, and I'll take you to that aspect, what we see is the Bass Strait fields are currently forecast to reduce by about 50% over the current time frame. In other words, starting several years ago and moving into the next few years. And that's been the major source of gas into the New South Wales and the other states over the last 50 years. 50% drop off in the major producer. And of course, the gas pipeline there moved from south to north. So I'll move to the next slide, please. Now we look at New South Wales and the gas permits. There are only 2 potential permit areas in New South Wales, and New South Wales is a major consumer in the Eastern Australian gas network. That's the Santos Pilliga project and the offshore Pepperleven project. So Santos announced in the last week that they would not be taking final investment decision on the Pilliga coal seam gas project until 2025. That means, in fact, that they won't be producing out of that field until perhaps several years later, provided they, of course, take that final investment decision. Now, I showed you an LNG slide earlier, and if we look at the international arena and the prices there, they have an impact on the LNG import terminals that have been proposed for East Coast Australia. And the LNG import terminal that was proposed for Port Kembla has advised the regulatory authorities that they do not, at the current time, propose to operate that in the near term, and it's been taken off the list of potential gas supplies into East Coast Australia. Now I'll move to the next slide, please. So we look at PEP11, a prospective recoverable resource of 5.7 TCF in structural targets. Our current application is to NOPTA to enable drilling as the next step. It now has significant additional importance, we believe, into the East Coast potential energy supply crisis solution. And there are 2 new gas-fired power stations starting in New South Wales. We are only 26 kilometres at the Baleen target from the Newcastle to Sydney gas pipeline. Next slide, please. When we look at the demand side based on the consultation paper again, you can see those green arrows. That's the winter maximum forecast out to 2042 of terajoules per day of gas demand. And of course, lower slide showing, again, gross annual consumption forecast petajoules per annum right out to 2042. Now, next slide, please. The offshore Sydney Basin is also recognised as a potential carbon storage area. And of course, proximity is a key, and carbon storage is for us an important aspect of our future proposed drilling. And in addition, of course, 1/3 of Australia's CO2 is produced within that arc from Newcastle through to Sydney. Next slide, please. Our basin is, of course, recognised as being in the gas window. In other words, a mature gas condensate source, and we see from our research, and that includes sampling the gas that comes out of the sea floor, that we're at the light end of that fraction. Next slide, please. Our target at Baleen, at the Permian Triassic, is approximately 20 square kilometres as a target drilling. That's a very significant size, and you can look at the data on that in our ASX releases. If we can go to the next slide, please. So 1.3 million households in New South Wales rely on gas, 33,000 businesses. And those businesses produce 33 billion of industry value, and without addressing New South Wales gas supply issues, and they now import 100% of the gas that they need from other states, then there is a potential real issue for New South Wales. And of course, I've already covered off on the carbon capture and storage. Next slide, please. Briefly into our clean hydrogen investment. It's a turquoise hydrogen area. In other words, it processes methane gas into 2 products, that is turquoise hydrogen and clean carbon black. Now, next slide, please, and I'll conclude at that. Our target for cost on hydrogen out of this production process, and they're moving through a phase up into the next scale of industrial production, is $2 per kilogram. And we have, we believe, advantages over the other methodologies of producing hydrogen that are currently in the marketplace. Next slide, please. Our disclaimer, and I'll conclude at that and take any questions. Thank you.
Thank you, David. We do have a couple of quick questions. I'll start. The first one is from a listener asking the question, how is the drill rig availability looking? And do we have a rough time frame on when we're looking to commence drilling? And this obviously is referring to PEP11.
So we haven't put any projections on either of those 2 elements into our releases on the ASX. but I'm going to give you market information that is broadly available across the marketplace. What we have seen is a hiatus of approvals, of an unfortunate hiatus of approvals, such that there were 40 environmental plan approvals stuck in the review process with the regulatory authority over the last year. In fact, the longest time frame is out to 2 years. There is significant focus from government and all parties to reducing that time frame and fixing that shortfall. In that time frame, additional rigs are being brought into Australia from other places overseas, such that those rigs may be capable of being used in a time frame where environmental plans are being taking about 12 months or so to be approved. And we take those factors into account in the way in which we're viewing potential time frames. And you have further, please.
Understood. Okay. An interesting question here around, do you think both of those businesses, whether it be the hydrogen and the gas businesses, are they a natural sort of mix? Are they, or do you think about it going forward, whether those two different businesses may be better off as standalone businesses?
So our ASX releases set out the way in which we've invested $2 million into the hydrogen project. We don't operate that project. It's a primary investment of the company. However, we have already entered into a first agreement to be able to utilise their technology and their skills and expertise in our Northern Territory area at Area 1, which I didn't mention in this presentation because of time constraints. But essentially, we've got a proven resource up there, and there is a significant demand in the Northern Territory, as I outlined and as we've outlined previously in other presentations, in the industrial area around us in the Kununurra region. So we would also look at and be very happy to examine the use of the clean hydrogen technology in the New South Wales project, subject to success in that project moving forward, because of course and I'll touch on this as an example, the Kurri Kurri gas plant is looking to use hydrogen as part of its input gas mix to the optimum level that it can operate with, even though its primary source obviously has to be methane. But there is a very significant demand for hydrogen in that industrial area that we spoke about.
Great, David. Thank you very much for your time today, David, and have a great weekend, and we hope to see you back again soon.
Thanks indeed, and thanks for the opportunity to present again today.